Let's start today with a very meaty, substantial discussion about the American economy. Inflation has reached its lowest annual level in 2 years. And the right is coming up with new ways to talk about how the economy is absolutely terrible. And that's the question we're going to address with real numbers today. I recently reported to you on Monday, in fact, Monday of this week or 3 months ago. I don't remember. No, it was 2 days ago. I told you about the better than expected jobs numbers that came out of April during the Biden administration. And I hesitate to give too much credit or blame on these issues in general to presidents because they have to do with so many broader macroeconomic trends. But everybody wants to make everything political. But let's not get ahead of ourselves. Let's start with inflation and then we'll move on from there. Consumer prices in April rise at slowest annual rate in 2 years. Reminder, often when we see the inflation numbers from last month, they are actually the numbers for the 12-month period ending last month. So in May, we get the April 22 to April 23 numbers. In June, we will get the May 22 to May 23 numbers. This is like a trailing 12-month period. Consumer prices in April, this is Yahoo Finance. Consumer prices in April showed inflation pressures remain elevated, while headline prices rose at the slowest annual rate since the period ending April 2021. According to the latest data from the Bureau of Labor Statistics, the Consumer Price Index revealed headline inflation rose 0.4% over the last month and 4.9% over the prior year in April. Now, reminder, inflation has been very high. As you can see here, this is a chart dating back to 1970. We had this period culminating in June of 2022, where inflation got very high, as high as it's been going all the way back to the early 80s. And then exactly as predicted, uncontroversially, it has been declining. My prediction was, and there's nothing special about me. I'm not patting myself on the back. I'm not special in any way. Just the way things were looking, getting an outlook of what we were seeing, in the used car market, in the grocery store, in real estate, just looking a little bit, being reasonable adults, most of us, some children in the audience. My sense was by the end of this year, we would be somewhere in the low fives, mid fours, roughly when it comes to inflation, which is still historically a little high, but dramatically lower, half of where we reached. So that's happening. And of course, you're already seeing right wingers saying, David, these numbers are obviously fake. Have you seen the price of eggs lately? And of course, it's not just driven by the price of eggs. This is a measure that we've talked about a number of times. It's composed of a number of factors. But let's now ask a broader question. If we look at all of those different indicators that I often tell you about to answer the question, is the economy doing well by traditional measures, which don't capture every aspect of the economy, but they give us a picture? What's going on with inflation? How is GDP? Where is unemployment? How's consumer confidence? How's the stock market doing? What about trade balance? You get a picture that is quite unremarkable in the sense of things are pretty much okay. Now, does that mean we don't have inequality? No, we do, and we've had it for a long time. Does this mean wages haven't been keeping up with inflation? Absolutely. Going back well beyond Joe Biden. But the picture is not a very scary picture. You look at GDP. GDP in Q4 of 2022 was up 2.6%. And in Q1 of this year was up 1.1%. 1.1%, again, this is annualized. This isn't an incredible number. We look for 2 to 3%. But it's not a bad number either. We saw, of course, this is a chart going back that includes the pandemic. Q2 of 2020, we saw one of the largest GDP decreases in a very long time. We made a lot of that back in Q3. And then the numbers have just sort of been like, okay, at the beginning of 2022, we actually saw some negative GDP growth, then more positive in Q3 and Q4 of last year, and then now a positive but not explosively exciting number. So GDP is sort of like, okay. You look at the unemployment rate and you see, of course, this big spike here. This was the heart of COVID, of the pandemic. And since then, unemployment has declined. Much of this under President Joe Biden. How much credit we give him depends on who you are. But be that as it is, you see that the unemployment rate has now gotten very low as it got under Trump, as low as it's been, quite frankly, dating all the way back to the late 1960s. So unemployment is very low. Doesn't look like a disaster. We then look at consumer confidence. Consumer confidence is another indicator representing the confidence of the average person in the American economy. And you see that consumer confidence did decline a little bit in April, not much, but a little bit. But it is historically at quite a high level. Consumer confidence is a little bit below where it was at the height of the stock market rally while Trump was president, but it is historically quite high. And the chart is on the screen and sort of the numbers speak for themselves. Well, what about the stock market? These are S&P 500 returns going all the way back to 1930. As you can see, this very clearly shows the boom bust cycle of the American economy. And as you can see here, we had 2022 last year, a very bad year for the stock market. 2021 was quite good. That was, again, a year under Joe Biden, the S&P returning 27% in 2021, losing 19% in 2022. And so far this year, the S&P 500 has returned more than 7%, and it's only May. So really no major red flag, big scary data from the stock market either. Things are pretty okay. And then lastly, you look at the trade balance, which many folks on the right often like to discuss. Important to understand. So trade balance means how much are we exporting versus how much are we importing? The U.S. has had consistent trade deficits for a long time. This chart, let's see if we can go back further. There we go. So if you go back to the mid 70s, the U.S. has had high trade deficits. And this is because we import a bunch of oil and consumer products. More recently, oil has not been the source of the trade deficit. That applies under Trump and Biden, even though Trump likes to pretend that it was only under Trump that we weren't having a deficit on oil, but it's under Biden as well. And as you can see, if we look more recently, since early 2022, the trade deficit has been declining. So again, a situation that is much bigger than Biden, but nothing hugely concerning. So what is the big picture with the economy? The big picture with the economy is that stepping outside of the political realm, without assigning credit or blame to Joe Biden or Kamala Harris or Donald Trump or Mike Pence, we just take a 20-year view and we look at what happened under Trump and what's been happening under Biden. And it is really difficult to make the statistical case that we are in a disastrous economy today. Could a major recession be coming? Of course. That's a reality of the type of capitalist economy in which we live. That was true under Bush, Obama, Trump, and Biden. But are we in a disastrously perilous place right now that we can point to when it comes to any of these indicators? The answer is no.